even if we have, economic slowdown, the support is going to help create a floor under the silver price.
Joining me today is Peter Krauth, author of The Great Silver Bull. In this interview, we get into why silver is trading where it is. We discuss the Bank of Canada's decision to raise the benchmark rate 100 basis points. We discuss the JPMorgan spoofing scandal, and we wrap it all up by discovering where we think silver is heading and where the global macro environment is heading. Peter, thanks so much for joining us today.
Well, Steve, it's a pleasure being here. I look forward to our first chat.
So our first chat, it's your first time joining us here on any of our deep dive sort of properties. Can you tell our audience a little bit about your background?
Sure. So I've been researching, writing, and investing in precious metals and commodities for the past 20 years, writing in particular for the last 15 years. And about 2 years ago, I teamed up with Gwen Preston at a research company called Resource Maven. Gwen writes her own newsletter on mostly junior explorers and developers. And we teamed up, and I started a silver newsletter. I launched that last year in January. And a couple of months after, decided that we're in the middle of a pandemic. There wasn't a whole lot to do. And a good friend of mine kept sort of prodding me, Peter, you really need to write a book. You've got all this background research and knowledge on silver. Why don't you just write a book on silver? And I saw what had happened. In fact, what got us to launch that silver newsletter in January was the way silver acted in the middle of the pandemic panic, which was sort of mid 2020. And I said, you know what? Why let a pandemic go to waste? Let's get that book written. I did that, and it was launched a couple months ago, and it's been a bestseller on Amazon since then.
It's funny when the pandemic started for us. We had some of our writers calling us up and saying, "Do I still have a job?" Freaking out that the world was about to fall apart, and at the time, I didn't know what to tell them. Fast forward, 3-4 months into the pandemic, the Fed starts introducing all this different quantitative easing. They're buying up mortgage-backed securities, and small cap stocks are flying. There was that summer of 2020 when precious metals went crazy. Now fast forward a couple of years later, and here we've got silver trading around $18. Gold, last time I checked, was around $1,700. What's happening right now? Why is it that precious metals are heading down the toilet?
Sure. So, people are afraid. People are worried because they've seen inflation. Inflation is a big driving factor. Obviously, I've been saying for a while that inflation is going to be the defining feature of the investment landscape for the next decade easily. And so, inflation is rising. So you'd think, okay, well, precious metals should do well during inflation, but we've got the Fed and other central banks. Look, the Bank of Canada just raised rates by a full 100 basis points, so a full percent. That hasn't happened for a very long time. I think it's 1998 or something. The Fed is raising the rates at the fastest pace in something like 22 years. So people are seeing that. That has pushed the dollar up. Precious metals are priced in dollars, so a stronger dollar means you need less of them to buy silver and gold. That's one sort of basic way to look at it. It's probably the sort of most driving factor right now in terms of what's keeping gold and silver down. But people are also concerned about the economy. If the Fed raises rates too quickly, other central banks raise them too quickly, that we're going to get a recession. I think a recession is pretty much baked in at this point. And so silver in particular is 50% industrial. And so, if the economy slows down, you'd expect that it's going to weigh on silver demand. And so I think that there is that concern, certainly to some extent. But I think these are the main things driving both metals.
Okay, so the Bank of Canada, you mentioned it. You're Canadian based. Is that accurate?
That's right.
Yeah. Okay.
Exactly.
So Something that I find a little bit interesting is that Canadians they're often concerned about the rest of the world paying enough attention to us. But I can tell you, over the last couple of years, Justin Trudeau has been all over my Twitter feed from various Americans and Europeans. And then yesterday's announcement with the Bank of Canada, or 2 days ago, announcing 100 basis points was all over the financial media. Were you surprised that the Bank of Canada went 100 basis points? And do you think it's going to have that big of an impact on inflation?
No. So yes and no. I was surprised about the increase. I was not expecting 100 basis points. And whether it's going to have an impact on inflation, to me, the answer is clearly no. I've been saying for quite some time that, central banks are trapped. We are at huge debt levels. I talk in the book about how in the 1970s, which is the closest sort of analog to what we're facing right now, full decade of really high rising inflation. And during that time period, believe it or not, debt to GDP actually fell. By the time we reached 1980, the debt to GDP level was 30%. Today, we're at 130%. So it's very simple. If you look at what's going on, you say, well, what ended inflation in the 1970s? Well, the Fed chair Volcker was able to raise rates, had the guts and the ability. I'm going to say that's important to consider. He had the ability to raise rates to 20% for a little while. That sounds crazy to some people today. I know that. But the reason he had the ability was because the debt to GDP level was so low. Debts relative to economic output were relatively low. Today, we're at more than 4 times the debt to GDP level that we had in the 1970s. So for me, it's very clear. Central banks will talk tough. They will raise rates somewhat. I don't think they're going to be raising them much farther. And then they're going to have to stop. And we're going to have a recession. And then they're going to start backing off and decreasing rates, but they're going to be decreasing rates from a much, much, much lower level. I mean, if you look at charts of, Fed rate hikes over the last, say, 30 years or so, each and every time they embarked on a new rate hiking cycle, the peak was lower than the previous cycle. So that means that the last one, which I think was that 2018 or so, we got to like 2.5%, 3%. I'd be surprised if we surpassed 3% this time before it flatlines and then they start backing off. But think about it. You're trying to fight a recession with a 3% Fed funds rate. How much cutting do you have? You have almost no room to cut. So, and they know debts are huge. If they increase rates too much, that makes paying the interest on these debts. I'm talking government debt, consumer debt, car loans, student debt, mortgages, you name it. I mean, it's all at practically record levels across the board. The Fed knows this. How much could it possibly raise rates without absolutely crushing everyone? The government itself would, not that we're not going there, but the government itself, I believe at some point, even without raising rates too much, is going to have to start, printing money just to pay the interest on its debt. So the Fed's hands are tied. Central banks' hands are tied. They can only go so far. They're going to talk tough, make people think that they're going to raise rates to keep things under control, but they can't. And in fact, it actually suits them to allow inflation to run hot because it makes debts easier to pay over time because the money's worth increasingly less. So that's how I see it playing.
So would it be safe to say that you're sort of modeling or forecasting for somewhat of a stagflationary environment moving forward?
Absolutely. Yep. That's about right. That's the best way to see it.
How big of a problem do you think inflation is for Joe Biden?
I think it's a big problem. I think that it's going to hurt him in the midterm elections. And he must know there's really nothing, he or his advisors must know there's really nothing realistically that they can do. The Fed knows it themselves. They're not going to admit it. But like I said, they're going to talk tough because that's really all they can do is try and manage expectations when it really comes down to that they can really only in a practical sense, really only do so much, raise rates so much without really crushing everything and everyone. So people should expect rates to stay low and inflation to stay high. That's really what I'm expecting is going to be the kind of environment we're going to be living in for years and maybe a decade or longer.
Okay, so you're the silver guy. We got to ask you. It's been all over the news. Former JPMorgan Chase managing director Michael Nowick is now in hot water with a federal jury looking into this idea of spoofing trades. What are your thoughts on this? Where do you sit on the whole debate on manipulation in terms of precious metals?
So, I'm not one of these guys that's going to go around saying it's not happening, because it clearly has been happening. These banks have been fined for that kind of behavior before. So it clearly is happening. I just think that what they managed to achieve is short-term manipulation, and over the longer term, the prices of the precious metals tend to play out nonetheless. Obviously they do it and they profit from it. But if you look at, where gold and where silver are going back to 2000, I mean, gold was at $250, 2001, silver was at $4. So, silver went to $50 twice since 2000. Gold's been to 2000 twice since 2000. So in the longer term, I think that it doesn't have a marked effect. In fact, people should just take advantage of it. If it suppresses prices on a short-term basis, take advantage of that and be a buyer when you see that kind of action.
Mm-hmm. So we often hear of triple-digit silver price. We had Keith Neumeyer on from First Majestic. He sort of dropped that idea in front of our audience. Why do you think it is that silver isn't moving in that direction right now?
Like I was saying earlier, there is pressure. There's no question. If we have a recession, look, silver's 50%, a little more than 50% industrial metal. So, that means that it goes into electronics, it goes into electrical uses, it goes into EVs, it goes into medical, all sorts of medical uses. And its single biggest use is solar. So, I think that even if we do see a slowdown, there's so much support for this, shift to a green economy and green energy that, and especially with solar, there's some countries where solar is the cheapest new way to add power to your electrical grid. And so, solar just gets cheaper. Solar consumes 11% of the annual supply of silver. And I just think there's so much support for this shift towards, green energy. And solar is, clearly considered very much a green energy, that even if we have, economic slowdown, the support is going to help create a floor under the silver price. And what's going to kick it higher is when you see that all bets are off with inflation, when the Fed, basically caves and the Fed blinks, stops increasing rates because it sees it really can't anymore, because a recession has kicked in, and actually starts to cool rates or pull back on rates, decreasing and cutting them. I think that's going to be your firing pistol, your firing shot for the next big up leg in precious metals. And I think, if you look at how silver acts, silver is very volatile. It's a very much a sentiment-based kind of asset. People buy precious metals when there's fear. And I think that the investment demand for silver is underrated in terms of what it can do. If you look at what happened, that was not a sustainable thing. But if you look at the silver squeeze at the end of January last year, silver went from $25 to $29 in the span of a few days. And it stayed there for a while. But I told subscribers, I said, don't expect that to last. This is not a fundamental shift in demand that's pushing silver demand up, in a sustained way all of a sudden overnight. And that's pretty much how it played out. The silver stocks went crazy for a while. It all backed off. That the one thing that has really pretty much maintained, and I find that very interesting. I detail actually all of this in the book, that premiums on silver were already high since the pandemic hit, and they just went through the roof. In some cases, they went to 75 and even 100% on the spot price. Wow. And what was really interesting is that there were reports of silver bullion dealers saying that, well, not only were they completely overwhelmed after decades of experience in the field, some of them had to shut down. They first of all, their phone and their websites were overwhelmed. They would crash. They had no more stock to sell to buyers. But the really interesting takeaway for me was that it was mostly small orders. So what you had was the retail side of things came in big time and said, I want a few ounces of silver and I want them now. And deliveries went from 2 to 3 days to 2 to 3 weeks. And what's interesting, if you look right now, I follow this pretty closely, but on a Canadian silver maple leaf, right now you're looking at a 50% premium over the spot price of silver. And on the American Eagle, you're looking at about 75 to 80% over the spot price. It's just crazy numbers.
So I got to ask there, like, these are huge premiums you're talking about, right?
Yep.
At what point do these premiums actually break the paper market?
Wow. I mean, it's going to take a serious amount of demand to really overwhelm the paper market. But I do think that that's ultimately where we're going, that the spot price is going to have to rise. It'll never match the physical price because you can justify a higher physical over spot. I mean, you've got, a silver, an ounce of silver right now, a coin. If you think about it, there's a fair amount of effort that goes into produce this thing versus the value of it, whichever way you want to decide what that value is. Compared to a gold coin, that's why the premiums on gold are a lot smaller on a percentage basis than they are on silver. But you've got manufacturing, you've got distribution, you've got warehousing, you've got your profits. So it does make sense to have, a higher cost for physical silver, especially for a single ounce, than the spot price. But the spot price absolutely has to rise, and I think it will rise. You're going to get a point when people lose faith in fiat currencies, and they're going to flock to precious metals. When you have that, it's just going to be completely overwhelmed. People think that they can't get inventory now, that they can't get supply now. We haven't seen anything. I mean, I think that it's going to just go absolutely wild, and the premiums are just going to go even that much higher. People should, I think, buy at least a little physical, maybe wait a little bit for premiums to come down somewhat. But yeah, absolutely. It's an area you want to have some exposure to. You don't want to be caught without at least a little bit of physical. It's proven itself over hundreds and thousands of years, in fact, and I believe we're going back towards that.
So I'll give you my theory, and I'm interested to get your thoughts on it. And what do I know? I'm just a ding dong that likes small cap stocks. But I believe that if we look at what happened in 2008, 2009, right? We had all these banks, they were underwater because they'd given out all these terrible loans. And what happened was the Fed ultimately did a journal entry that we called quantitative easing, where they just properly capitalized all the banks. I think that that's going to happen, but this time it's going to happen with the Fed now buying sovereigns of European countries and Japanese debt. And that's ultimately going to be a pretty big hit to the US dollar and ultimately possibly get precious metals going. I'm certainly positioned for that. But that's sort of my thesis on where we're heading. What do you think about that?
Sure. I mean, look, you've got all kinds of central banks that are buying stocks outright. In some cases, it's very questionable about whether they're even allowed to be doing that. But they'll create special purpose vehicles. They'll do all sorts of things to get around it, and they do it anyway. So whether it's buying stocks, ETFs, bonds of other nations, all sorts of things. I mean, I do believe absolutely that that's where we're going, and I think that there's a great book by I'm sure some of your followers have read this and know about it, but a guy by the name Willem Middelkoop, who I met actually a couple months ago at a mining conference, wrote a book called The Big Reset. And I'm in the process of reading that right now, and it's just tremendous. I think all of your viewers should go ahead and read that book, because he talks about, and this actually goes back. He wrote this about 8 or so years ago, but all of it is very much still important and true today. And it's clear that we're going very much. A lot of these things that he talks about have actually come to pass, and we're going in that direction. And what I think kind of the most important thesis of it is that, I haven't finished the book, so I just want to be clear about that. But some of the important points is he says, gold is the anti-dollar. Gold and silver are the anti-dollar. And so, we're certainly evolving, if you want to use that word. Maybe I'm too generous, but we're working towards a future where precious metals will have some form of backing currency once again, whether it's overt or not. You could just have something like a big announcement by the Bank of China saying that, our last official declaration on how much gold we have was, say, 1,500 tons. Today, it's 5,000 tons. Something along those lines. And I am convinced that they're aiming to reach what the US says it has officially, which is about 8,000 tons. And that'll put them on par with the US. Their economy is a couple of years maybe from matching the size of the US economy. And so they play the long game. And, an overnight announcement like that, I think, is going to be a huge game changer. People just should not sit back and be lax about it. They have to be careful of what I call, what is definitely called recency bias. Don't assume that what you've experienced and lived up until the last, recent past is the way things are going to play out going forward. Be forward-looking. Look at non-mainstream media, information sources to see, make up your own mind about what's logical, but look at the arguments and see what makes sense. And, history does not necessarily repeat, but it often rhymes. And if you look at what happened in the 70s, I think that's a great indication for where we're headed. I think it's just going to be on another level. So people really, really need to look at what may be coming and prepare for it accordingly.
Yeah. Well, Peter, thanks so much for hopping on here today. Really appreciate your commentary, and hopefully you'll come back on in the future as we continue to see this crazy global macro environment play out. And Peter, for our audience, where can they go to get more of your commentary?
So I'm on Twitter. I'm on LinkedIn as well. And if they want to know more about the book, it's available on Amazon. It's called The Great Silver Bull. And I go through all the thesis about why silver is a must-own asset, its history, why it's important today, given how governments and central banks are acting. And then you get a great idea of how silver is important for industry and as money, and how it's likely to play out, what makes it distinct, and how at least I build my own ideal silver portfolio. So again, it's available on Amazon in paperback and in Kindle version.
Perfect. Thanks so much for joining us, Peter.
My pleasure. Thanks again, Steve.
All right, everybody. Thank you so much for watching, and let us know what you think the future might look like for silver in the comment section. All right. Thank you, everybody.